as usual, just please understand that any advice in today's session is of a general nature only, and that your personal circumstances have not been taken into consideration. Okay, all right, so let us get moving straight away as I find my pen, my marker. All right, so this is what we have in the week ahead of us in terms of data for the majors that we look at. Now, before we get to the specifics of that, a couple of things that must be said about the markets in recent times. As you all know, 2 weeks ago, the FOMC met for an interest rate decision. The decision was that it was not going to move. And then last week, Ms. Yellen had her first opportunity to speak post-decision, and pretty much the market interpreted that information in the way that it has. And basically what I mean by that is Miss Yellen basically came out and said that she was very surprised at dollar weakness following the FOMC decision not to increase the rates in September, and pretty much put up her most aggressive statement or her most aggressive forward thinking that rates will happen in this year. Okay, so what does that actually mean to us? Instantly, when she came out and said that, momentum shifted back again towards the US dollar, and it gained against pretty much all majors. All right, we saw the Aussie dollar drop, we saw the euro drop, GBP USD dropped, and that's as a consequence of her statement. Now, you've got to remember that there's only two more meetings pretty much to go. Well, three if you count December, but December happens like on the 29th of December, which is virtually 2016. So the entire market is basically saying, hang on a minute, if you're telling us that you are going to increase the rates, it's really got to happen next month in October or in November. So all of a sudden, the US dollar gained in strength. All right, so that's what made that movement possible. That's the mechanics behind it and the fundamentals. Now, this particular week, being the 1st of October, starts on Thursday. Traditionally, the first Friday of the month is non-farm payroll numbers, so that changes the entire ball game, and it puts a specific it's a quite a very large emphasis on the numbers that are going to come out from non-farm payroll, and I'll go into that right now. Basically, they are expecting around about 202,000 jobs to be the employment change, all right, for the month of October. And this number is going to be looked at specifically with a lot of second thought as to what that number may mean for the interest rate decision. If this number comes in at 202 or anything higher, it's going to be seen as a positive, all right? And the interpretation will almost instantly be that it's positive, that's it. Pretty much now, FOMC has no reason to delay the interest rate decision any further, and what you would see immediately is massive US dollar strength. Okay, you'll see people start to position themselves in for an interest rate rise. So it could be a move that lasts like 3 days, where it just steadily grows up. Apart from the initial shock factor or the raw data, which let's call it euphoria, when the number comes out and the market moves crazy. So this particular month, it's got a double edge. It's not only we are looking at the fact that the numbers came in at whatever they come in at, the level that they come in also signifies to pretty much the entire market, this is it, it's good enough, they're going to raise interest rates, let's jump all over the US dollar and let's go for the ride. That's the consensus, that is the feeling that the market is experiencing right now. So this week is going to be very, very well looked upon, as well as, and just as important, the unemployment number, the 5.1. Already, traditionally in the US, 5% when unemployment is at 5%, it is regarded as full employment. You never get below that pretty much. So that is regarded that everybody has jobs. So this number is already a massive tick in their reasoning to raise those rates. So as long as this number doesn't come in at like 150 or something like that and it absolutely shocks everything and just puts everything out of whack, pretty much this number comes in good. If we get a 220 or anything over 200, it's going to be US dollar strength all the way for a double reason. All right. So I hope everybody understands why this particular month these numbers are going to carry a little bit more weight than normal because we only have 2 months left in the year. Miss Yellen pretty much spelt it out that she said she wants to raise rates this year. And this number this week is pretty much like the last hurdle, if there is any. And I think the market is interpreting the information in that manner. Okay? And the market being you, myself, uh, traders for corporations, hedging fund managers, and so forth. All right. So this is a very, very important number. The first Friday of every month is non-farm payroll figures. It is a volatile week. The other things that we have that are quite important for us this particular week is we have China PMI figures. All right. For the Aussie front, this is going to be an important number. We've got building approvals, but more importantly, we've got retail sales as well. So these are the highlights for our own Aussie dollar, as well as the counterparty, the Aussie dollar, US dollar, anything US is affecting us as well. Now, this particular week as well, we have 5 members of that FOMC committee speaking. 4 of them are voters, 1 is a non-voter. The 4 voters that are speaking, they're strongly considered very dovish, okay, meaning not super aggressive in their thinking, but we're running out of time. 2015 is finishing. We have 3 meetings to go, and if you disregard December, because that one happens on the 29th of December, the reality is we've only got 2 meetings to go. If you're going to pull the trigger, it's going to be October or November. If these numbers hit the mark and they're taken in accordingly as a good positive sign, the market is going to interpret it exactly as that, and they will start to load up. You will get a lot of money shifting into the US dollar, and it could be the start of that really nice rally. Okay, when I have a look at the charts, it'll make a little bit more sense, but that's the major focus for this week. On the GBP, we have the account figures. We also have PMI numbers, construction PMI, and manufacturing. And what was one other one? And the governor is speaking as well on Wednesday. So I think in terms of raw data that is coming out for us this week, I think probably the currency that's going to be the most under the pump is going to be GBP USD. It's going to be the most susceptible to data. And given lately that the GBP USD is doing swings of 400 and 500, 600 odd pips at a time, this is the one that's going to be affected the most by data. All right. So please take note. These are the times when these announcements take place. These times are in my local time, which is Australian Eastern Standard, or otherwise Sydney. Make an adjustment to your calendar. That's when they come out. Let's get our charts going and let's have a look at what the market has to offer for us this week. Any questions, please type them in as we go, and we'll see if we can navigate our way through this week of trading. Okay, all right, so let us start off with the Aussie USD. Now, last week we were around about here, and we marked out this area where we had previously had some support, and we flagged it because we had these 2 big pin bars, and we flagged it as an area that it could now be resistance. Unfortunately, what I was actually hoping for was a little candle in there so that I could take the trade. I didn't quite get it, and it shot down, and it left without us. Did anybody take this? Did anybody take a short on the Aussie dollar last Monday based on this? I didn't actually get a setup. Bijan did, well done. It was a trade that I really wanted to take and participate in, but I had to stick to my guns. I didn't get the setup that I was looking for. All right, so that's unfortunate. That's gone. This week, this chart is it's in a little bit of no man's land. It's not. We haven't come and hit a double bottom. We're not in a channel. We're not at a fib level. We're kind of in the middle of nowhere. The only thing that I can think of that I kind of like is if we apply our counter trading strategy, all right, and on the assumption that this level holds here, we got the fractal. We do have an inside bar set up there for a counter trend trade back up in that direction. Now, do I have enough reasons to take this trade? I don't really know that I do. This level is kind of hanging. It's like I said, it's not a double top. It's not a fib level. It's just based off a counter trend strategy. So I'm going to take the trade, all right, because I just got a feeling about it. If I had to judge it in my trades that I like the probabilities on it, where 10 is a trade that I would take with my eyes closed every single day of the week, and that doesn't mean that it's a winning trade though. That means it's just a trade that I really, really like and it's got everything set up. This one would rank in at about a 5. Okay, I've got a little bit of reasons to take it, not a lot, but I'm looking for a trade, so I'm going to place it. You don't need to unless you want to. The basis here is that I've got a nice inside candle set up, and we've got a bit of data coming out, and if I break the top of that candle there, I'm going to head into that direction. My risk level is going to be the tail of that trade there, so I think there's enough in that for me. All right, so I'm going to place it right now, so just give me one moment. I'll just zoom in to make it easier. I want to make sure I'm in the right account as well. Yes, I am. Okay, so the high there is 70.41, so I'm going to buy at 70.45. Buy stop at 70.45. I'm just going to take one mini lot on it. I'm going to place my stop here, 69.33. And just remember, this trade, I need to cancel it out if I break on the downside. 69.33 is roughly, it's 116. Let me just place any target, and I'll place it in one, and I'll fix it up in one moment. And there we go. All right, so that stop is 109. That's 150. I'll keep it there. All right, and just remember that the one-to-one area is about there. It'll be at about 71.55 or something like somewhere around about there where I've just made that mark. That'll be the one-to-one point at which I challenge you to think if you want to close some of the trade, move a stop, or do something. Okay, so I'm in. Just remember, if this comes and breaks this low, if this candle comes down to there, then I'll come back and cancel the order out because it won't be valid. All right, so the basis of this trade is that I've got a fractal down the bottom. I'm at the bottom of a zigzag. Well, at least I think I am, because if this was to continue down now, you'll find that the zigzag line will change and it will move to wherever we go over here. But at the moment, it looks like it's a bottom, and there is a nice inside candle with a nice pin bar, which gives you an indication to a lot of buyers coming into the market at that region. So if I break the top and hit this, I want to continue in that direction. Okay. The other thing that helps me in the fundamentals of this trade, if this was to go up, what does that mean for the US dollar? Help me out. If our trade was to play out break and continue up. What does that mean for the US dollar? The US dollar falls. Well done. Okay, now traditionally prior to non-farm payrolls, a lot of people start to close out their US dollar positions because they don't want to go through the risk of a big swing during non-farm payroll. Okay, so when they start to close out, all right, they might be thinking that the US dollar is going to get weaker or stronger. They close out their positions, and in essence, what they're doing is they're weakening the US dollar, which helps this movement. Okay, so those are all my complete reasons for that trade. Does everybody understand that? Anybody have any questions with what I've just done? I've done that off a daily chart. Okay, it's a daily chart. Any questions on our Aussie dollar, Aussie US dollar position? No, we're all good? Fantastic. Okay, let's move on. Let's have a look at the Euro USD. Okay, Euro USD, if I zoom out a little bit, you can see that I'm still inside that daily chart channel. I have not come to the area where I was interested in. I was hoping that, we're going to come down to this area. It has not happened yet. I don't want to force a trade here, so I'm going to continue to wait. So I'm going to wait. We are getting close there. This is where I would like to take the trade in an ideal situation. So I'm going to wait to see if the market comes down towards me. At that point, what I would like to do, I'd like to get exactly what I just got before, the two inside candle situation. At the break, trade it in that direction. Alternatively, I don't mind if I get an engulfing candle, like I might get a candle like that, and then I might get a candle like this on that side, and then basically as soon as I get the open there, away I go. Now, in this situation here, I don't have to wait for the fractal because I'm using the bottom of the channel for the like a platform or like a springboard. Okay, so because typically when you get the engulfing situation, as I've just shown there, that fractal will not appear until after this candle starts. So this candle, let's color them in. Let's say these are our green ones. Okay, then this candle might open there and may do this as another green candle. And when that one finishes and this one starts, at that point, that's when the fractal will appear. But because I've got this bottom line, which I'm using as my springboard, I don't need to wait for this candle to complete. All right, at the open, if I do get an engulfing candle at the open, meaning right here, I'm in on the trade straight away. All right, does everybody understand that? These little differences add up to quite a lot of pips and distances in the market, and it's important to be aware of that in a situation where I'm trading in a nice parallel channel like I am. The fractal, you will find that when after the bounce, the fractal will be there. If it bounces, the fractal will be there. Okay, so I'm really using the line more than the fractal. All right. Okay, so that's our Euro USD. Let me have a quick look at a 4-hour chart, see if I've got anything happening here. No, nothing. It doesn't look right to me. I just thought there might have been a bit of support there, but it's not quite on the money. So Euro USD for this week, we're going to wait. Let's see if we can come down to this channel. We're very close, and with the US gaining in strength, we may get an opportunity to take a trade in this vicinity. Okay? All right, GBP USD. I believe we got stopped out on our GBP USD trade last week. I'm trying to remember. Did we take it off a 4-hour chart or was it off a daily chart? Can someone remind me? Was it the 4-hour or the daily chart? It was an inside candle. I'm just trying to remember where the trade was. Who took the trade? Might have been a 4-hour from memory. I think it was this trade over here, in there somewhere. Oh, sorry, it was a Euro USD. It wasn't a GBP USD. Okay, sorry, it was. Okay, let me quickly go back to the Euro USD. 1 second. 4-hour. Okay, I can see this was the trade that we were trying to take last week. I think it was in here. It might have been this one here. In there was it. We were trying to bounce it back, um, but it came down and stopped us out, and then the bounce happened at a different point. Okay, and what we were trying to work off was, I think, this level here that we were hoping would have held, but it didn't. All right, sorry, I forgot which one it was. I wasn't ignoring the fact that we got stopped out. So we got stopped out on that one there. It was just a standard trade for us. Okay, all right. So GBP USD. GBP USD. Look, it's doing these huge swings. Remember, we took a monster trade up, and then last week I flagged this region as an area where we might get a turning point. Last Monday was 1, 2, 3, 4. We were here somewhere in here. And again, I feel so cheated that I didn't get a setup out of none of these three candles. So I was looking for a setup to justify a short and I could not find it. So I did not trade that. Did anybody trade GBP USD off this? I don't think without a setup, I didn't really have enough reason to actually do it. But it was an area that we flagged. What I might do this week in this Thursday class, we'll do a class on identifying hotspots in the market. Hotspots are critical when you get good at picking them. What I like to call a hotspot is an area where the market always pushes away from a hotspot. So let's call it something like, I don't know, it could be like kryptonite, you know. So if you think of Superman and kryptonite, he goes to the kryptonite, he's got to move away from it. You've got to move away from it because otherwise it doesn't like it. So if we pick a hot spot, it's so hot the market doesn't like to be in that area. And when you can pick them, you can usually trigger all your trades off the hotspots. So we'll do a session on a hotspot. The question being asked, was those three candles a reversal signal? Not quite, Bijan. This is a bit of a lookalike. What the three candle reversal sequence that I think you're thinking of looks like this. You'll get your blue candle. Okay, it could just have a little bit of that. Then the next candle can be blue or red. It's better if it's red, but it can be either color and it may look something like this. Okay, and then the next candle must come down and close past halfway of the blue candle. If you see this setup, it's what we typically call I don't remember the name. I just know them off by heart. I think he's a shooting star or a hangman or something along those lines. I can't remember the name given to it, but it's a setup. And then when this candle opens up right here, bang, you take the trade. Evening star. Okay, thank you. Yeah, so Bijan, this is a bit of a lookalike. It's not quite. Okay, so it's not an engulfing. It's not an inside. It's none of these. All right. Um, Ray's asking a question, what about the pin bar? Okay, people get so confused about pin bars. There was a really good example of a pin bar on my Euro AUD chart, which I'll show you when I get to it. I would not consider this candle a candle that is a pin bar. A candle that is a pin bar, in my eyes, looks a bit like this, like that, and it'll either have zero wick on this side or it'll be like a tiny wick. And if you look at it in the other direction, again, it'll be like that. Where this tail is like at least 4 to 5 times the size of that body, and it really looks like a little tadpole. All right, so this candle here is not a pin bar in my eyes, so it's not a good enough reason to take a trade. Okay, so even though I had identified the hot spot, I didn't get a setup that I was looking for. So if I took the trade straight off it, well, I mean, it turned out to be a good trade, but it's a trade that I would say had a lower probability as to had I had one of these price action candle set up on that border. Does that make sense to everybody? Yep, we're all good? Great. All right. Okay, so what do we do this week on our, you know what, guys? I really like this. I'm thinking that this is a bit of a hot spot as well. All right. It's acted as a big uh, support in the past. It's gone there and question mark. Can it do it again? What do we think? Let's put this one out to everybody in the room. I just want to get a feel on what we think. Who likes that? Who likes us to attempt to trade that bounce? Okay. All right. I haven't had a single no. All right. So let's go. So that's what we're going to try and do. So let's try and do it. It's setting up. It's not quite ready yet, but okay. So the first thing that we want to notice is I'm on a daily chart. All right. And I've already got an established candle here. All I need to happen is I need this candle, the current one, this one here, to finish inside that level and inside that level. That's what I want. If I get that tomorrow, when the next candle starts, say over here, wherever it starts, then at the break of that candle, that's where I'm going to take a trade. So this even so think about this concept, all right? Even though we are at a critical level, think about all the excitement that you just want to jump in on the trade right now, all right? Jumping in on the trade right now, let's say I'm just going to make up some numbers just to paint a picture for you. If I jump in on the trade right now, yes, I am at the hotspot. The trade may have, for example, a 50% probability of bouncing. Okay, and you would get the trade at say that level. Okay, if I wait for a price action setup, the probability will go up to about 70%. And the fact that it's on this level here, that type of trade is around about a 70% probability trade. So waiting for this candle to finish and then placing a pending order, not only does it calm my emotions down and helps my psychology, but it also increases the probability of the trade. In either case, we can get stopped out on both. All right, but I'm going to wait for it. So what you need to do tomorrow morning, you need to check this candle, make sure this candle is still inside of that one. And if that's the case, then place your pending order at the break of the inside candle in that direction. We all clear? Uh, Todd's asking, is that line a double bottom? It's not quite a double bottom. Like double bottoms are pretty much spot on, but it's close-ish to a double bottom. All right, not quite. However, I'm more interested in this entire region. Okay. Remember last time when we took this trade, we took that trade based on we were hoping that the market had a bit of memory. So we took a little bit of, last time we took that trade over here, um, hoping that this level will hold, and we took it with price action in our favor and it played out for us. So what we're trying to do now is we're trying to hope that this holds again, and if we get the price action, we want to get a bit of bounce back up that way. Okay, question being asked, can we go opposite if the support does not hold? Great question. What do we think? So what Rav is asking, let's say that the current candle, and I'll do it in red, let's say that this current candle, tomorrow morning when we wake up, we are here, and it looks exactly like that. Is that a trade? What do we think? Would that be a trade in the opposite direction? Okay, I've got 1, 2, 3, 4 yeses, 1 no. Yep, 6, 7. Okay. The answer is yes. The answer would be a trade because now you're doing a break of a support level trade. All right. So you could trade it in this direction. All right. Either if you're aggressive, you can take a trade straight away, or if you're more conservative, you can wait and hope that the market pulls back towards this level somewhere and then take your trade in that direction. Okay, so does everybody understand that type of trade? Um, I get the feeling that this is not the trade that's going to show itself tomorrow. That's why I just instantly didn't think of it. But thank you, Rav. That would be a valid point as well. Okay, one other question someone's asking, can I check the divergence on this? Give me 1 second. Let me check the divergence because you can get divergence when at double bottoms and things of that nature. So just give me 1 second. There is a bit of divergence there. Can everybody see? Okay. Can I just get a quick show? Who knows what divergence is? Who does not know what divergence is? Just no or yes? Just an N or a Y? Okay, I got 1, 2, 3, 4, 5. Okay. Probably, okay, what I might do is I haven't done a divergence class in a long time, so I might have to do it again soon. All right, basically what divergence is when the indicators go in one direction and the price is going in the other direction. So in this example, you got the bottom and the bottom here are like a straight line, but if you look here, the bottom and the bottom here are slightly pointing in an upward direction. So there is a slight bit of divergence. It's not confirmed yet. It's not confirmed. What you'll find is if we do get the inside candle and the break up, the divergence will be confirmed as well. All right. I can't go into the details of divergence right now, but suffice to say that I will schedule a class for it. Okay, deal? Okay. All right. So thank you for that. So there is a little bit of divergence happening, but it's not confirmed yet. In any case, we still spotted the trade minus that extra factor. All right. So tomorrow, I want you to first thing, what 7 a.m. Candles starting at 7 a.m. right now, or not yet. We haven't gone into daylight savings. 7 a.m. Okay, yes. All right, 7 a.m. Check this candle. If it's completed and it's inside, you can place your pending order straight away, and then you're done. Okay. All right, let's carry on. Let's have a look at gold. Okay, gold. Alright, so I'm tracking this triangle and I just did a little readjustment to it this morning. And who likes the look of that triangle? What do we think? Okay, and can anybody see that there's a trade set on it right now? Let me zoom in a bit better. There it is. Can can anybody can everybody see that there is a trade set right now? All I got to do is place the pending order. Yeah? Good, good. There is a nice, these kind of trades, these are the ones that I just close my eyes and I just say, yep, doesn't matter, I'll take it. And if I get stopped out, I don't even feel bad about it. All right. You got to remember trading is about probabilities and getting your mindset. We are going to have losing trades. There's no doubt about it. We're going to get losing trades. All right. So remember, every trade that we take on Mondays, we're running at trades of 2 to 1. So even if I'm only correct 30% or 40% of the time, we should be ahead. All right. So we got stopped out last week on the Euro USD, so we lost 1. The week before on the GBP, we won 2. And I think we actually, well, we're way ahead. But in any case, what I'm trying to say is, don't be afraid of getting a losing trade. All right. So the only thing to remember here, I'm going to place a trade right now. The only thing with this one is just remember it's gold. With gold, you can't trade micro level like you can with currencies. That's just the way gold is. So you will have to place a little bit of a larger trade. So if you don't like that, that's okay. Just don't take the trade. All right. Now the setup is clear, big engulfing, big candle there and an inside candle right next to it. It's the perfect colors, blue, back red. It's happening right on this triangle. It's the it's the third touch. It's clear as day. I'm on a daily chart. So what I'm going to do is I'm placing a pending sell right there to go this direction. The only thing that may deter me from this trade is if I don't have enough room to my target. Now my stop has to be here. So if I just draw it out, I think 1 to 1 is about there. And I may not have enough for 2 to 1 on this one. So what I may do is if I want to go for 2 to 1, you still go for 2 to 1 if you want it. Okay. If you get 2 to 1 on this trade, that means you've got to break the bottom one. You can go for another 3 to 1 because then you've got the break of the triangle trade. So the beauty of this type of trade depends on how much character and how much patience that you have with your trading. The beauty of picking the trade at the top and then it comes through. By the time you get back towards the bottom line, you've hit your targets, all your stops have been moved to break even, and then you break the bottom. Well, then you got this as your next target. Okay, so it really opens up a nice trade. The other thing I do like about this trade, it's on a daily chart. A lot of people would have noticed this pattern right now. All right, a lot of people would have noticed. So let's place the order. The low of this one is 1140.79. So I'm gonna jump in at 1140.74 or 75. So let me try and get it. It's going to be a sell stop 1140. Now 0.1 is the smallest that I can trade, so I'll take that. 1140 and let's go at 74.0. My stop will be 1157.20. 1157.20. My target, I'll put him around about here. 1113.40. 1113.40. And let's hit the button. Does it look right? That looks 2 to 1 to me actually. Let me just measure. 160. It's slightly less than 2 to 1. Okay, but I'm happy with those levels. And again, don't forget, at 1 to 1, if you use the order management tool, you can close out half the trade at the 1 to 1 level if you don't want to continue with the risk. The only thing to keep an eye on is that if we do break that top, come back and cancel the order. Okay? Is everybody clear on what I have just done with gold? Yes, we all clear. Fantastic. Okay, I really, really like that trade. You don't get too many like this that come up, so I really, really do like that one. Okay, let's move on. US yen. This is probably the messiest that I've seen the US yen after a big long candle like this in a long, long time. And it's purely because the market doesn't know, are interest rates going up? Are they going down? Are they going up? Are they going down? What are they going to do? What's the job numbers? Are they going up? Are they going down? So there's total confusion in the market and it's showing. So even in our 4-hour chart, I keep extending. Look, we're still trading inside it. Every week I keep extending this congestion zone and I'm still inside it. All right. And I really haven't had a good trade anywhere. Like these levels were a little bit on the high side, not close enough to the edge for me. This one, not quite. This one, not even a setup. So I haven't actually pulled a trade out of this congestion, which is frustrating because it's nice congestion, but I haven't been able to take a trade. All right. So what I'm looking for, the US yen this week, I'm just going to kind of leave it alone a little bit. What I think may happen is I think non-farm numbers are going to be okay and we're going to finally get the lift off, hopefully in October. So the US yen is the kind of trade that I would want to trade and hold for a long time. There was a trade that I was holding for quite some time, but I lost patience with it, even though I held it for like 3 months. And right now I've got 0 positions on the US yen. So what I'm actually looking for is an opportunity to buy in at a cheapish price. All right, but right now, there is nothing showing. I'm in the middle of congestion. So this week, US yen, 0. We do nothing. All right. Euro yen. Let's move on. Okay, Euro yen. I drew this top line last week. Okay, and I was hoping that we would get to it, but we didn't. The market pulled away from us. And so what I've got now is, let me get rid of this one because it's kind of doing nothing. You can see the start here of a nice converging triangle. Now remember, with converging triangles, what you're looking for when they start is when you break a high. See here, we broke a high and then you break a low. So where the market expands, it got bigger up the top and then went all the way through and got a lower low. Once you get that high and that lower low, then generally the market starts to tighten up again. And that's what I've just noticed. It looks better on a 4-hour chart. So let me show you. There it is. Okay. So I'm happy to trade this triangle. All right. Now, again, I'm going to apply price action principles before I take any trade. And I think the first opportunity that we may get a chance here or here. All right. And either one, I don't care. I'm happy. And in this particular case, there's 4 trades that I'm looking for. I'm happy to trade that way, this way, that way, or that way. So you can see that I'm not very fussy. But I am fussy about where I take the trade. All right, these 2 levels are important so that I'm not interested in trying to get a trade a little bit beforehand or anything like that. It must be on the border. All right, if I get price action on the border, it increases the probability, and that's what I want to do. All right, so with the Euro USD this week, let me zoom in. This is a 4-hour chart that we're looking at. What I want you to look for is a price action entry. Okay, these levels have now been confirmed. So from here, That way you can trade anywhere off those markers as long as we get the setup for it. All right, and we're going to be looking for an engulfing candle or an inside bar to rebound back on the inside, or a big break in bull bar uh, like that to break out of the triangle, or a big break in bear bar to break out of the triangle in this direction. All right, so those are the types of setups that we are interested in. All right, we all clear? Yep, great. All right, let's have a look at the Kiwi dollar. Okay, I marked out this 4-hour channel for us last week and we were over here somewhere. Who took the break-in trade? Did anybody take that break-in trade? So I see Rav did. Well done. Okay. Who did anybody see it happen and then decided not to take the trade? Did anybody see it happen but then decided not to take the trade? I'm particularly interested to see this answer. No? Okay. All right. This is one of those examples where if I let me zoom in a little bit so we can see it a bit better, where we get this candle is the signal to jump on the trade. All right. So, but sometimes it's a little bit scary because at this point you would have to enter the trade here and all you have as a reference is you just going, wait a minute, look how this has just come all the way from down there. Why would I want to jump on the trade right now? This just sounds, this is ridiculous. All right. And fear will kick in. And it is the most difficult trade that I can think of emotionally to take. Simply because we go, oh, this has gone too far down. And in fact, people that don't understand channels and haven't found the channel, a lot of them will actually try and trade it in the opposite direction. Okay, and which is actually good that some people try to trade in the other direction because they all place their stops over here, and as the market starts to hit their stops, it continues to push us where we want to go. All right, this is a very, very difficult trade to take emotionally, the same as the break out of a triangle. If you try and trade one of those, you will understand firsthand what I'm talking about. If you've never attempted to trade, you only intellectually are trying to comprehend what I'm saying, but emotionally you don't know what I mean. Okay, so what I suggest when you get a chance, anybody, if you do, you should all attempt one of these trades, even on a small amount of money, just so that you can feel the adrenaline of what I'm actually talking about, because this is a fear that pops up in every trader. It's very, very common, and you need to learn to see how you behave with that fear around. It'll never go away, but you kind of get used to it, if you know what I mean. Um, this trade did give us a little bit of an opportunity on a pullback to enter in this area here to go down as such. All right, and this type of trade, typically, like if I hit that trade there, my stop would have been the last significant high, which would have been in there somewhere, and you can see that the trade got to the 1-to-1 region, all right, which is crucial. Okay, 1-to-1 is very, very important for me, for my psychology. That's why I always stress it for you guys to come up with your own set of rules. All right, so that happened. Where does that leave us now? Let me get rid of these lines now because I don't need them. Daily chart. Let me zoom in. There's really good congestion here. Okay, I'm happy to trade this congestion. Now, if the US does gains strength, we will break and hit new lows here. So so I'm thinking fundamentals here. So part of my brain is thinking, if we get that US strength, that's what's going to happen. Um, so, all right, this is a tricky one to trade. All right, so what I would be looking for, depending what the chart looks like by Friday before non-farm, all right, I'd be looking to trade a breakout. So if we were to get like a candle like this, that's it. I'll jump on it and then I'll have to just ride through non-farm. Whatever happens, happens. If I get the break up, likewise, I would have to do whatever happens, happens. All right. So I'm going to try and trade a breakout. Now you can trade it aggressively like I've drawn it, or you can, when you get the break, you can try and see if you get the pullback to come back down. Okay. A couple of questions being asked. Give me 1 second. All right. Sorry, I can't do three things at the same time. Okay, first of all, I got a comment, was a fractal with an inside bar so confusing? Okay, so Romy, is that referring to the euro, to another chart, the one that I had before? I didn't see your question before. Is that a yes? Okay, got it. Give me 1 second. Okay, so I just want to address this because some other people might have been thinking this. The channel that I had on the 4-hour chart, quickly, I'll just draw it there. Let me zoom in. This was the breaking candle, and Romy is saying that this candle's got a fractal on it, which would suggest that it's going to go that direction, but I'm telling you to trade in this direction, so she's confused. That's what you're referring to, Romy? Just confirm for me, yes? Okay, fantastic. Now the thing is, this fractal was not there when this candle started. So if you were to trade this correctly, all right, as soon as this candle started, basically that's it. You're in the trade already, okay? And just ignore the fractal. The fractal I mainly use for turning points, for counter trend. This is a breakout and continuation, so the fractal is not required. So I just got the fractal on my template, but I was not using it at all. All right, so does that make sense? I'm sure that if you thought that, I'm sure that somebody else may have been thinking the same thing. All right, so the fractal was not used in this particular trade. So in fact, I only use the fractals when I'm trying to change directions. All right, so that everybody understands. Okay, so let me delete that again, get rid of them, go back to my daily chart. So I'm in a congested region here. So what I'm going to try and do is trade the breakout of that congestion on a daily chart. Okay, so that's Kiwi Dollar. Let me go to the final one for the week, Euro Aussie. Somebody said to me about a pin bar. I said there was an example. There was not the best, but it's still a pretty good example. Last week on a 4-hour chart, I identified this line. And I said, I just got this feeling about this line. It's hitting so many times. Let's see if we can try, if there's anybody here that's a little bit more on the aggressive side, let's see if we can try and trade it. Okay, now we nearly got entries here, but we broke on the wrong side. This candle broke down the bottom here, so we didn't get an entry. But this candle here is very interesting. Okay, so it looks it's like a pin bar, okay? But the most interesting part about this candle is that look, all this area from there to there broke through that level and then immediately shot back up. So what that basically means is there was a lot of people trying to trade this bounce, and they all had their stops over here, and then the market moved. They all toppled over like dominoes, and then all the buyers said this is a bargain, and it bang came straight back in and shot the market back the other way. Okay, so whenever you trade, trying to trade like a flat line there, and if you place your stop just on the other side, a lot of times you're going to get stopped out. Okay, in theory, it is the correct place to put it, but you know what? Everybody teaches that. So I can go to a website and they'll tell me to put my stop over here. So the way that I try and trade is I try to think what the other trader's going to do. So I'm actually trying to outthink somebody else, because for me to win, somebody else has to lose. Okay? And I know that there's a lot of inexperienced traders that put all their stops over here. So generally, that's why I wait for price action break. If I get a price action break, I never ever get caught up in that mess. Okay, so that's it's a total different type of setup. So, but when you do get this, sometimes when you get the sense, especially when you get so many times that we've come there, okay, and keep coming there, what you can do is you can watch it, and as a rule of thumb, as a bit of a rule of thumb, draw yourself a line where you see there's a lot of kind of like a ceiling, all right, where a lot of candles are going, and that distance, draw it down here. And if you want to, what I'd like to do is I like to enter my trade there as a buy and place my stop that distance, so down here. If I get stopped out now, well then I've well and truly been stopped out. Okay. Someone just asked me the questions, what about if I trade it without a stop? No, that is absolutely no, because what could have happened here is this could have gone down 400 pips, and then what do you do? Okay. That's not what we're about. All right, so absolutely not. But I'm just trying to give you a feel to why these situations happen. In any case, we didn't get any setups out of this, so we got no trade out of the Euro Aussie. Another question. Yep, you said do not go sell on the break. Um, Okay, Rav saying that I said not to sell on the break, to take the trade. Okay, yes, that's correct. I believe last week somebody asked me, what about if we sell, if we break down? And I said, no, don't sell on the break. I said, if you want to sell, wait for the candle to close below and give us the confirmation. And then you would have started your trade over here. Because if you just sold in this direction as soon as you broke, well then you can see what happened. You got stopped out, and this is a good example. Thanks, Rav. Okay, so it's critical. Look, more experience will show you these things. All right, let me quickly see what we got for this week. Euro Aussie. Look, let's just leave it alone. It's still too volatile. It's still in this kind of region, and it's just jumping wildly. So I got nothing for you on the Euro Aussie. All right, any questions? Type them in. Let me review what we've done today. We've placed a pending order on our Aussie dollar, and we're close to being triggered. You can see there, we're not triggered yet. Euro USD, we are going to wait for the market to come to us at the bottom of that channel. GBP USD, tomorrow morning, let's see what this candle looks like, and we may have a short sell, or we may have a pending buy stop. Gold, we have an order in the market. We're close to trigger, but we're not triggered yet. We are trying to go short. US yen, we said nothing. Euro yen, we're monitoring a 4-hour triangle, and we're waiting for the market to come to us. Kiwi dollar, we're going to try and trade the breakout on a daily, and the Euro Aussie, we're going to sit along the sidelines. Question, stop loss for the AUD USD below this candle here, Ray, below that candle right there. 69.33. Let me have a look. What have I got? 69.33. Thank you. Okay. Could I have a look at the CAD? All right, I'm running out of time, but I'll have a quick look. Give me 1 second. The US CAD. Just ignore those lines. Those lines are there for something else. Let me get rid of them. This looks really funny. US CAD is in uncharted waters. We keep breaking highs. There's a nice inside candles at the top here. 1, 2. But I'm not willing to sell it. No action right now on the US CAD for me. Any other questions? We're all good? All right, well, hopefully that's helped map out the week for us. We got 2 pending orders in the market. We got possibly a third trade that may get placed tomorrow morning. Look out for those levels as we approach those borders. Let's have a look at, we'll do a session on hot regions in a chart on Thursday. All right, so I'll prepare for that. I'll see you all on Thursday at 3:30. Please take notes of the times that those news announcements are coming out. And remember, the one that's the hot one for the week is the GBP USD. Have a great week. See you on Thursday. Bye for now.